Hello everyone, this is Chuck Yang. Welcome to my Easy Trade Educator series. Today is April 25th, 2023. It has been 40 days since I started sharing my stock market analysis. Over this 40-day period, we experienced 4 different major market stages. My very first free video was in the morning of March 16th, before market open, where I very clearly stated that I was bullish on Nasdaq technology stocks and the index QQQ or futures NQ. About 20 days later, on April 5th, I shared a video to analyze the economic cycle and identify the sectors and stocks that could perform well in a recession, and started getting more bullish on Dow Jones Industrial Average and consumer staple stocks, utility stocks, and healthcare stocks, and less bullish on Nasdaq. Then 10 days later, on April 16th, I cautioned my viewers that Nasdaq had very, very poor market breadth and suggested very short-term trading instead of longer-term hold. After 40 days of going long, today I have just turned bearish. Before I start sharing my opinion on the current market, I would like to spend a few minutes to briefly recall my analysis of the past 40 days so we understand where we came from, and then we can talk about the next step. A lot of work has been put into these free sharing videos. I'd like to remind my viewers to give me the courtesy of hitting the free subscription button. I need to have the number of subscriptions to keep increasing and reach 1,000 in a month. If that goal can be reached, this series of free videos will continue. If it cannot be reached, the videos will no longer be free. Please subscribe to my channel and share the link with your friends and keep the subscription number growing so I can continue sharing. This is the very first free video that I uploaded to YouTube. It was put out in the morning of March 16th before market open, and analysis was based on the data of April 15th. At that time, April 15th was still here. This is the S&P index. The market was very bearish. Everything was tanking, especially the bank stocks, because of the bankruptcy of Silicon Valley Bank. However, I look at the Nasdaq. It was here. Nasdaq was strong. I observed that Nasdaq was strong. The bankruptcies did not affect the technology stocks, and technology stock was the safe haven. So investors rotate from other sectors into technology stocks as a safe haven. So from that observation, I concluded that Nasdaq will go up. So that's why I said bank stocks are bad, but technology stocks are good. And also, as part of the analysis, the chart of the Nasdaq 100 index QQQ has already formed a double bottom pattern. To emphasize the formation of the double bottom pattern, I have the picture of the beautiful lady to just emphasize the double bottom pattern. And the Nasdaq corrected along with the rest, but it showed strength. It bounced off from the support. And because of this, and also my observation of the situation that market was rotating from the other sectors into technology sector. So that's why I concluded that the technology stocks was going to be leading for the next few weeks. And that turned out to be indeed the case. The bottom line is that we're in a recession. Keep that in mind. In a recession, these three sectors doing better. Okay, to summarize, consumer staples doing better, utility will be doing better, and healthcare will be doing better. So we need to go back to the during the recession, we're going down. This red is a recession. And in the recession, healthcare, consumer staples, utilities will be doing better. During recovery, technology will be doing better. So recently, technology did better. It's because the bank was bad. Technology had nothing to do with the bank, so people fly to safety. Technology was safety for the past 2 or 3 weeks. People fly to safety and dump the banks. Fly to safety, technology. But right now, people come back to the economic cycle, healthcare, consumer stable, and utilities. So I hope I got this point across. So my viewer, I hope this will benefit my viewers. All right. So I'm just trying to give a big picture of this, the current strong, which sector is strong, and then you should consider getting some positions in the strong sector, move out the weak sectors. This is much better than QQQ. Dow Jones Industrial Average yesterday was up and green. So right now, Dow Jones Industrial Average is the leader. So Nasdaq is gradually falling behind. Dow Jones Industrial Average is the leader. Yeah, and yesterday it was up and with a green candle. Now, we should not waste time on the Russell 2000. I've been repeatedly saying we should not touch Russell 2000 all the way. Every day I say we should not touch it. Many small banks there. Okay, so far Dow Jones Industrial Average is the leader. Okay, now also taking into account the sector rotation thing I just talked about, that makes perfect sense. These are 30 components of the Dow Jones Industrial Average. Okay, Apple is technology. Amgen, you see why Dow Jones Industrial Average is strong. You see, Amgen is a biotech company, like healthcare. Okay, now Johnson Johnson should be good, of course. Johnson Johnson is either considered the healthcare or considered the consumer staples. It jumped big up. That's why all this Dow Jones Industrial Average has many of these healthcare companies. Okay, J.P. Morgan will be bad without looking. It will be bad. Yeah, it's bad. Coca-Cola stable, consumer stable. Okay, Coca-Cola. I without looking, I know it will be good. Okay, Coke. Yes, you see. And then since we look at Coca-Cola, let's also look at Pepsi. It should be good. Okay, and then think about it. Which one would be good? A consumer stable. McDonald would be good, right? Let's look at McDonald. Yes, it went up. Okay, I don't know. Dollar Tree, BL, TR. Wow, you see, these inexpensive retail stores should be doing better in the recession. Next one is McDonald. We already looked at that. And 3M, I don't know, Merck should be good. Yes, you see, without looking at it, Merck should be good. So I think now probably it's a good time to get into Merck. Okay, at least sell some put spreads. Okay, Procter Gamble, guess it. I think it should be good. It probably related to healthcare, consumer stable healthcare. I think it has to do with that. It should be good. Let me hit it. Yeah, right. Walmart, it's up. It's up. Walnut. Yeah, because again, you see, think about the inexpensive in a bad economy. Things are inexpensive should be doing well. Okay, Dollar Tree is doing well, and Walmart is doing well. Since we look at Walmart, let's look at Costco. Yes, Costco is doing relatively better. You see, it was up. Okay, I don't know why today is down. Does it have anything to do with earnings or something? And pre-market is down. Okay. I think I've get my point across now. Okay, so we are in the recession. However, I'd like to caution. I've observed the following trouble for the Nasdaq 100. Breadth is very poor. That means the more stocks going down than going up. And that's, in general, when that happens, not a very good sign. Because of this, I think the right way to trade the Nasdaq now is to be not to be greedy anymore, not go for big shots. Rather than we should just do a day trade or very short term trading, either day trade or 1 or 2 days. Okay, when we wait for it, now we need to be patient. Wait for it to come back to support and stabilize, and then buy. And when it goes up, and we should sell. Don't wait. Don't think it's going to have a big move. Okay. For example, this is a Nasdaq 100. I have a three-line system. You see, it's just oscillating between these three lines. Okay. So when it comes down to the, if it's a very weak, it will come down to the bottom line. But if it's okay and it has some strength, it will just come and stabilize at the middle line. Okay, so definitely when this go up to the upper line, sell. At least sell half. Sell. Okay. The main reason is because of breadth. I don't like the breadth. Okay, I don't like the breadth. If the breadth are good, we could shoot for strong up moves. But the breadth has been poor. So that means that we should not we should not be too greedy to hope for big runs. If this go up near here, sell half of it. Okay, sell half of it at least. Okay, and then wait for it to come back down to the white line, middle line again, and then once it stabilizes, and if we look at the Heikin Ashi chart or something, and then when everything is green, then we start buying. Okay, we start buying. So now we cannot afford to be too greedy now for the case of Nasdaq. Okay, let me quickly recap what we did the past 40 days. This will just take a minute. We started out March 16th and bullish on Nasdaq. I was here, so we're able to capture these 2 weeks of upward move. And then on April 5th, we look at the economic cycle. We decide the Nasdaq is no longer leading, and the Dow Jones Industrial Average will be leading. So if we look at the Dow Jones Industrial Average, indeed, we will be capturing this upward move. April 16th, somewhere here, we pointed out a very poor breadth of the Nasdaq market. So we suggested doing only short-term trading, not for big runs. And also I shared the three-line system. So right, April 16th around here. So we reminded the poor market breadth, we should not hope for a big market move, but rather going in and out for smaller movement between these lines. And you can buy at the white line and sell at the upper. And when you hit the lower line, you can buy it and sell at midline. So you capture this smaller movement. And for those savvy investors, could start, trading downward direction, selling short. Okay, so if we execute my advice, we would have been in very good shape. Here's the reason I'm bearish now. This is a system that I developed over the past 20 years. So I programmed this is like 1,500 lines of code. The system, you see, the system give a buy signal when the red line turns green and provide support. That means we should go long. You give a buy signal on March 14th. So we have been going long as long as the line remains blue, light blue, and not turning red. We go long, and then buy on dips. Okay, so this has been continuing for 40 days. All right, now it turned red. Yeah, actually, the red signal came around 11 o'clock. By the time I saw it, it was about noonish. So in many of my social media groups, I shared my system and indicated that my system is now bearish now. Okay, so Nasdaq was the one that first provided the sell signal. It's about 11 o'clock, followed by S&P. S&P is similar. S&P gave the sell signal a little bit later, 12 o'clock. Okay, around here it gave the sell signal, and for people who just want just used to go long without shorting, you just sell it. But then for people who are willing to go both directions, you sell the long position, and also at the same time selling short. Dow Jones Industrial Average is the strongest, so in the reverse direction is the last one. So Dow Jones Industrial Average, we got the signal at 1 p.m. So QQQ give the sell signal at 11, and S&P give the sell signal at 12 noon, and Dow Jones Industrial Average give the sell signal at 1 p.m. on Tuesday. All right. So if I follow this system and don't doubt it, I should be able to profit from both directions. Yeah, the key is to there's a lot of market noise, and if we don't have such a system, and people would be always doubting because the noise goes up and down, and people's psychology change. But with this system, it gives us a very good indication of which direction it's going. All right, so obviously now it's going the downward direction, especially the Nasdaq, which is the weakest. So if I go short, I will pick the QQQ to short. Okay, so anytime there's a bounce, that give me the opportunity to add to my position, short position, as long as it does not break the resistance. So my system give an automatic resistance. Okay, in the upward trend, it gives support, but now the trend is down. In the downward direction, it gives the resistance. As long as the resistance is not broken, and it could have a bounce, and once it bounces and stop going up, we can sell short. So now we go in the downward direction. Okay, and at some point, this resistance will keep moving with the price. At some point, the resistance is broken, then we will reverse direction and going up again. So my system is trend following. I don't care much about the fundamentals, and we just go with the direction of the market. The market is always right, and we just follow the market. Of course, there's no guarantee that every system would make money all the time, but we go with probability. With high probability, this system is very profitable. Okay, but this system will have some not very effective periods where the market just oscillates up and down, up and down. That's when in that period this system does not perform very well. But if the market just consistently going up, 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 and down, 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 this system is very profitable. All right. Hope this is very useful to you. And if you think my video can benefit you, please subscribe to my channel. It's very important for the subscription number to go up. If in a month the subscription number go up to 1,000, then all this free sharing will continue. If I cannot get the subscription number up first in a month or two, and then this free sharing will be stopped. Thank you for watching. See you next time.